Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard you can input your core drivers for the model under core inputs section, equity waterfall assumptions, review the core financials and EBITDA chart by years. So let's start from the core input section. First of all, you have construction costs as an output of construction cost sheet. I'll explain a bit more how to set up this sheet. As a total, you have total construction costs for your property. Then you can input loan to cost ratio, for example 60%, and that will drive the construction loan amount, which is 18.2 millions multiplied by 60% equals to 10.9 millions. Then you have occupancy ramp up, which can be 4 months, for example. So which means that first month you will have 25% occupancy, the next month 50%, next 75%, and starting from the month number 4 you will have 100% of your occupancy. Then you have construction start date. Let's pretend it's April. It will drive the launch for the construction loan as well. And you have the hold period, for example 110 months. That will drive the sales date, which is construction start date plus 110 months. Then you can input the sales price, for example 35 millions, and the sales expenses, for example 5%. So here you have the net sales price, which is sales price excluding sales expenses. So once you set up the construction costs, wages, variable and management fees, fixed expenses and assets, which I'll explain a bit more later, you may review your core financials and the EBITDA chart by years. On the top right section of the dashboard you have equity waterfall with IRR hurdles, assumptions and outputs. So you have 4 sections here: equity contributions, promote structure, partnership level returns and property metrics. So under equity contributions you should set up the allocation between general partners investors and limited partners investors contributions. So let's pretend general partners investors share is 5% and other 95% is for limited partners. To the right you may see the calculation of amounts for these contributions. On the next section you can input the promote structure assumptions, which is hurdle 2, 3 and 4 IRR. So let's pretend for hurdle 2 the IRR hurdle will be 7%, hurdle 3 12 and 16 for hurdle number 4. And you have the GP promote depending on hurdle 5%, 10 and 15 for example. So you may see to the right how this promote impacts the shares of general partner and limited partner. So for the hurdle 1 you have 5 and 95, which is equity contribution share. For the hurdle 2 you have 9.8 and 90.3%, 14.5, 85.5, 19.3 and 80.8%. The next section will show you the partnership level returns, which is cash outflow or cash contributions, which is the same amount 28 and 536,000 here. You can see the profit broken down by limited partner and general partner, the IRR percentage and multiple on investment capital or equity multiple. You can see also some property metrics for the acquisition and exit, like purchase price per room and total, purchase price less debt proceeds per room and total, exit sales price per room and total, and finally net sales proceeds per room and total as well. On the equity waterfall tab you may see all the calculations by months for the equity contributions, promote structure, so you can see the net cash flow for distribution, summary of investor level returns by months, return of capital and hurdle or preferred return, hurdle 2 calculation, hurdle 3 calculation, hurdle 4, some return metrics and some risk metrics. On the KPIs tab, you may see the main investors' KPIs and outputs, which are partnership level returns, property metrics, property level return metrics, and sensitivity analysis. Under partnership level returns, all KPIs broken down by limited partner and general partner KPIs. You may see the cash outflow or cash contributions, profit, IRR percentage, and multiple on investment capital or equity multiple. Under property metrics, you may see the acquisition and exit KPIs, which are purchase price per room and total, purchase price less debt proceeds per room and total, the sales price per room and total, and net sales proceeds also per room and total. Under property level return metrics, you may see the KPIs broken down by unlevered and levered cash flow, which are IRR percentage, multiple on investment capital, total cash invested, total revenue, total profit, and cash on cash return or average free and clear return. On the sensitivity analysis tab, you may see the different scenarios of your metrics like IRR, multiple on investment capital, and profit, depending on different hold periods and exit cap rates. So these yellow cells are changeable. For example, you may say the middle point for your hold period 80 months. So you'll have scenarios for hold period 56 months, 68 months, 80 months, 92 and 104 months. Also, you can set the middle point for your exit cap rate, for example 6%. So you'll have scenarios for 2, 4, 6, 8 and 10% of exit cap rate. On the sensitivity tab, you may see the values for your IRR depending on these exit cap rates and hold periods. If you would like, you may see the profit amount. Let's give a couple of seconds to update this tab. So you may see different profit amounts depending on the exit cap rate and hold period. Also on the top left cell, you may see the profit calculated by the model. The same way you have multiple on investment capital scenarios. So you can see the value calculated by the model and different scenario assumptions and outputs. On the income statement tab, you may see your main components of profit and loss, which is revenue, salaries and wages, variable expenses, gross operating profit, management fees, fixed expenses, EBITDA, total depreciation and amortization, reserves for replacement, EBIT, interest expense, net operating income, gain loss on sale, and finally net income. Each category has its own subcategories, so for example, if you would like to see the subcomponents of fixed expenses, you can click on this plus button and you will see the detailization of fixed expenses. The same works for revenue, for salaries and wages, like this, and for variable expenses, for management fees, depreciation, amortization as well. On the cash flow, you may see your cash flow from operating activities, from investing activities, from financing activities. In the cash flow indirect method, you may see the same information in more collapsed form, which is easier to review. And on the balance sheet, you may see your current assets, non-current assets, current liabilities, non-current liabilities, and your equity. Finally, on the summary tab, you may see the 10 years summary for the income statement, and here you may click and select specific year, and you will see this year broken down by months. The same information you may see on the charts below. Then you may see the main KPIs of your balance sheet, also for the 10 years and for the selected year with charts. And finally the cash flow statement information for the 10 years and for the selected year by months with the charts, which will show you the operating, investing and financing activities. On the top expenses tab, you may see top 4 expense line items and all other expenses collapsed into one line, which is other here. Also, you may see the absolute values breakdown by 10 years and percentage allocation broken down by 10 years. The same information you may see on the charts below, where you may see the percentage allocation and absolute values allocation by main expense categories. On the expenses depth and on monthly run rate chart, you may see the specific year broken down by absolute values on the charts on the left side and percentage allocation on the pie chart. On the expenses bridge, you may see the main drivers of your expense growth. So, for example, I can select 2022 till 2027, and on the left side I may see the total expenses for 2022. On the right side I may see the total expenses for 2027, and in between you may see the main drivers of this expense growth, which is salaries and wages in this case, property tax, lease and rental expense, interest expense, and other with absolute values on this chart. On the charts tab you may see the main financial KPIs by months for the next 10 years. So on the top you may see the net operating income chart. Then you have the EBITDA breakdown, which consists of salaries and wages, variable expenses, management fees, and fixed expenses, and finally, as a blue line, you may see the resulted EBITDA. The next chart will show you the operating cash outflow by months, and finally, on the last chart, you may see the construction cost breakdown, which is broken down by acquisition, land purchase, soft cost, hard cost, and other costs. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports, and other information which can be useful for reporting purposes. On the tabs without color, you have some extra calculations related to revenue, to debts, equity, inventory, and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements, and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets, and you go directly to this tab. On the Inputs tab, you can set up your property assumptions. So you have up to 40 placeholders. You can treat them as a unit groups. For example, unit group A, which can be 40 units in this group, or 20 units, or whatever amount you need. You have the total square feet of this unit group, for example, 500 square feet. Or you can treat this as a separate units. For example, building 1. In this case, count of units for building 1 obviously is 1, and you can adjust the square feet as well. On the bottom you can see the total amount of units and the total square foot for these unit types. On the construction costs tab, you can input your construction expenses broken down by 4 main categories, which are acquisition and land purchase group, soft costs, hard costs, and other costs. So each category has its own subcategories. First line item for the acquisition land purchase is defined for the land purchase. You should not change this name here, it is gray, but you can change the spending, for example 3 million, or even 0 out if you don't need to purchase the land. You have also some predefined subcategories, which are most typical for each of the groups, but you can change these names as well, or even remove these line items if you don't need them. So let me show you how it works. So first of all, you need to set up, as we just discussed, the category name, then you should input the spending. Next, you have different growth methods. You have up to 4 different methods, and I will walk you through one by one. So for example, if you will select the straight line, first of all, it's the simplest one. You need to set up the start date and end date. By default, the start date is connected to the construction start date, and end date is kind of 3 months here, but you can change it to 6 months or whatever amount of months you need. So if you select the growth method as straight line, you will have the straight amount, just these 3 millions broken down by 9 months. You have also check here to double check that this amount and amount by months is the same. So it's just easier for you to understand how it works. The next way is steady growth. So you have steady growth each month. First month is around 67,000, the next 133,000, 200,000. Let me show you how it works if I will insert here a small chart for better understanding. So this is steady growth. If I will select the bell curve, I need to input the bell curve shape. You may see now this cell is yellow. This means that I need to select something. By default, you will have some curve, but you can change it to spiky. You can see that this is spiky bell curve, medium, less spiky, and flat. So this is more flat bell curve. So these amounts are spread here. And the final option is to select as a growth method custom. So now you have this line as inputs. It's yellow now. Check is not okay because we need to spread this amount. So I can input 1 million here, another million here, and another million here. So now check is okay. So it's kind of more manual or custom way to input your spending by months. Obviously start date and end date is also not needed here because you input everything manually. Let me change it back. I hope that makes sense. The same idea for all other soft costs, hard costs, and other costs. And as a final result, you have the total construction costs and its breakdown by months. The VM expenses tab, you can set up your variable expenses and management expenses. You have 15 placeholders for the variable expenses and 6 placeholders for the management fees. Some of the names are already predefined. You just use the most typical names for these categories, but you can rename them. For example, variable expenses other, or any other name if you would like. And to the right, you can set up assumptions as a dollars per month by years. For example, admin and general can be $3,000 per month for the 2020, and each next year will be plus $100 per month. Exactly the same idea for other 14 placeholders for the variable expenses and for the management fees. Below you may see the calculation, the values broken down by line items and by months for the variable expenses and for the management fees. And finally, in the income statement, under variable expenses and management fees sections, you may see the detailed values by months and by different line items. On the Fixed Expenses tab, you have 25 placeholders to set up your fixed expenses line items. So let me show you how it works. First of all, in the Categories column, you need to input the name of this fixed expenses line item, for example, utilities. Next column is launch or start date. By default, this is connected to the operation start date on the dashboard, but you can change it as well. For example, December 20. The end date is also connected to the sales date on the dashboard, but you can change it. For example, January 29. Then you have 8 different periodicity approaches. So let me show you how it works one by one. For example, one time spending of $1,000. So obviously, if you select it one time, you don't need end date, just one date and one spending. We have in December 20, $1,000. The next, you can select the daily basis, and you will have $31,000 because in December you have 31 days. Then January 31,000 again, February is 28,000, etc. till the January 29. So the January 29 is the last date when you have this category of fixed expenses. Another option is weekly. In this case, you will have 4 payments each month, 4,000 per month. If you will select bi-weekly, you will have 2 payments roughly each month, so in this case you will have $2,000. In case of monthly, you will have steady $1,000 per month till the end, which is January 29. In case of quarterly, you will have 1 payment per quarter starting from December 20. As you may see here, if you will select semi-annually, you will have 1 payment per each half a year starting from December 20. And the last approach is yearly. You will have $1,000 each year in December. Additional cool thing which you have in the model, this is yearly growth rate. For example, if I will select monthly, August 20 for example, and I want to add 5% of growth the next year, then 4% into 2022 and 2% each next year. So you may see that starting from January 21, you will have instead of $1,000, $1,050. Then in January 22, within the year, you will have $1,092, and etc. till the end of the model. So you'll have steady growth of this fixed expense by years. And finally, in income statement, in the fixed expenses category, you will see the breakdown of your fixed expenses by line items and by months as well. On the wages tab, you have 19 placeholders to set up your staffing assumptions. So let me show you how it works. On the categories column, you need to set up the position name, for example CEO. The hire date by default is connected to the operation start date on the dashboard, and fire date is connected to the sales date on the dashboard as well. But if you need, you can use the drop down to select the needed date. For example, for CEO, the hire date will be May and the fire will be still the sales date. Then you need to input the annual base salary, for example $50,000. The next step is to set up your monthly bonus, for example 5%, and payroll tax rate, for example 12%. In the next section, you can input the staff count or FTE count, so it will be 1, for example, across all the years. Let me give you another example. For example, manager. Want to start hiring in September 20, and June 28 will be the last date or fire date. So you may see immediately 29 is gray here, so you don't need to input any FTEs here. So the annual base can be, for example, $40,000 with 3% of monthly bonus, with the same 12% tax rate. You want to hire 2 in 2020, 4, 6, 8, 10, 12, and steady 12 till the end of the model. So additionally, you are able to set up the annual salary rise position or annual salary growth. It can be, for example, 5% across all the years. So below you may see the calculation of your annual salary, depending on annual base and depending on the salary rise percentage. Below you may see the total headcount calculation or total FTE calculation by months, calculation of salaries by months, bonuses by months, and payroll taxes. And finally, in income statement, under salaries and wages category, you may see the breakdown of your salaries and wages by positions and the amounts by months. On the Assets tab, you have 7 placeholders to set up your assets categories or groups. First 2 lines are predefined, which is land cost and other construction cost, and these costs are linked to the table of construction costs. So the land purchase amount is 2 million and everything else is in the second line item, which is other construction costs. Obviously, land cost should not be depreciable, so useful time years is 0. So you may see in here the calculation of capital expenditure and the closing net book value, and no depreciation for land. For the second line item, you can input some useful time in years, for example 25 years. So you may see the capital expenditure by months, you may see the book depreciation and closing net book value. Also you have 5 different placeholders for other construction costs or assets, for example asset 2. So you may input some purchase date, for example May 20, 1 million of asset costs and 5 years of useful time. So you may see below this asset 2, 1 million spent in May, and the depreciation for the next 5 years and closing net book value for the next 5 years. So in income statement tab, we can see the total depreciation and amortization amount by months. On the cash flow, you may see the fixed assets capital expenditure by months. And on the balance sheet, we can see under fixed assets the closing net book value of these assets. On the top right corner of the dashboard, you have debt assumptions. You have 3 placeholders, and one of these placeholders is predefined for the construction loan, as we just discussed it, that the amount is driven by construction cost and loan to cost ratio. The launch is driven by the construction start date, so you can change the term. It can be, for example, 110 months interest only period, which means count of months when you will pay only interest, 10 months for example, the annual interest rate 12% for example, and one of 2 types, usual or annuity. Let it be annuity. Let's set up other loan as an example. For example, $500,000 is launch date May 20, with 60 months term, with 3 months of interest only, is 10% of annual interest rate, and it can be usual. So yeah, that's how it works. So you may change up to 3 loans and play with the assumptions for these loans. At the top of the dashboard, you have currency and denominator assumptions. So let me show you how it works. First of all, you have a section with currency inputs and currency outputs. If you would like to see all the model assumptions and outputs in the same currency, for example in United States dollars, you can just keep default values and keep exchange rate as a default as well. But for example, if you would like to input all the assumptions in United States dollars and see the outputs in euros, you need to input the currency exchange rate in this case. This can be 1.2 for example. So what happens? In all the reports now you can see the numbers in euros. The same for charts and all statements like income statement, cash flow, balance sheet and all other reports. Another cool option is to use denominator. By default you have 1000. What does it mean? It means that for the all reports and charts you have $1,000 as a denomination. Means that this is in $1,000 or euros in this case. But if you would like to see it in millions, you can just change this denomination, and instead of thousands you will see millions. You can use just 1 and you will see in dollars, so no denomination applied. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.